tell you about the equity market. So let's shift focus to the commodity space. Manisha joins in as always to run us through what's happening there overnight. Hey Manisha, good morning.
Hi Nigel, morning. Well, it is quite a mixed when you look at the commodity space today in the morning. After nearly 2% decline yesterday, the crude oil prices have seen some buying come back. Of course, the OPEC and Russia cut has been supportive. Markets also have seen the U.S. rig count continue to decline. The month-on-month U.S. production growth also seems to be slowing down a bit. And then, of course, you have Iran waivers. So all of that really seems to be coming into the prices. But then again, it is the global economic demand growth that is still worrying, and that perhaps seems to be capping gains. So as we've been saying earlier, that after that huge correction on the higher side, it really seems like consolidation coming in crude oil prices. Now we seem to be averaging around those $60 per barrel mark for the Brent prices. The decline, though, has continued for the metal space. Well, the China data hasn't been so strong. Even with the China stimulus measures that we have been seeing, whether it is about the requirement ratio for the banks, the stimulus for the railways, infrastructure, the loans that they have been giving out, the on-ground metal demand hasn't picked up so much. And even with all those measures that China has been putting out, the metals are not budging out of their recent ranges. So that really seems to be a worrying point. So until you see that demand pick up, markets will continue to trade around these levels. There is more economic data coming out today. You have the producer price index from Eurozone. You have more U.S. data coming in today in sense of business confidence, etc. So that would give you further direction.
Thank you, Manisha, for joining us and giving us all those details. Well, let's talk about stocks then. Zee Entertainment will be on our radar on the back of its Q3 numbers that are due today. And Manglam Malu joins us to run us through all the expectations. Morning, Manglam.
Good morning. So for Zee, the thing is that during this quarter, more than the financial performance, the street will be watching out for the news flow, because it was during this quarter that we saw a correction in the stock price. At the same time, there were downgrades coming in from multiple brokerages, and more importantly, the big news coming in of the promoters' intent to sell their 50% stake or bring in a global strategic partner. So all of that weighed down on people's minds more than the financial performance that they will be watching out for. But for whatever it's worth, the revenue growth is expected to be about 15%. That's what the cnbc TV18 poll throws up. The EBITDA is likely to expand, but that expansion will be limited to just about 20%. Margins around 33.5% is what the street will be watching out for. And on the back of that, we're expecting a 36% growth in the net profit. Remember, this is adjusted growth because there was an exceptional in the base quarter. So 36% will be optical. The number that you'll be looking out for would be anywhere between 438 to 445 crores on the bottom line. And now to the granular details. Their revenue is comprised of two important things: the ad revenue and the subscription revenue. Majority of their revenue comes in from advertisement. So 15 to 17% on a reported basis is the ad revenue that we're working with. Subscription revenue should be anywhere around 16 to 18%. We'll have to watch out for the impact of TRAI regulations and the DTH or digitization. We'll watch out for viewership trend, but any update on management stake sale, the investments that they're likely to make in Z5, and the sort of margin expansion that the company shows would be most important. All
right, Manglam, tell us about the derivatives market as well. What are the cues coming in from there?
Well, for the derivatives market, Nigel, tell you what, the FIs didn't only sell in the cash market, they sold about 1,000 odd crores in index futures too. And if you break it up out there, 410 long contracts added, and compare that to 13,550 short contracts added. So at the peak of this series, FIIs were 53% long. Now they're 53% short. So the long exposure has fallen to 47%. And it'll be very interesting to see how this is taken by the street, because yesterday, yes, while the Nifty did decline by about 57 points, we saw a recovery from the lows to the tune of around 40-45 points. And we did reconquer the 50-day moving average as well. So we closed above that. So let's see how that goes, given the SGX Nifty is indicating a strong start, and a start around that 20, 200 and 100-day moving average. The 10,800 to 10,850 mark is very important as far as our markets are concerned. The FIIs in index options, a lot of protection, bought close to 16,000 puts added on the long side. 13,000 puts were also added on the short side. That's telling you that if at all there is a decline, perhaps that would be supported. There was also some call writing which was seen, which was reflected in the put call ratio, which fell from levels of 1.4 to to about 1.3 odd. And out there, we saw a lot of call writing in the important zone of 10,800 to 850. So 10,900 calls saw some writing, 10,800 calls saw some writing, and the 10,600 put, which has a premium of around 80, tells you that maybe the lower end would be supported. In terms of stocks, the one stock I'm watching out for is Yes Bank, up 6% yesterday, saw some open interest contraction in the Jan series, but Feb series, we saw an OI addition of 60 lakh shares. So interesting moves out there.
Absolutely, Manglam. Thanks a lot for joining us. Well, let's move on to Bull's Eye Corner. Our contestants this week, Thakkar, Vijay Chopra and Shalini Mukdam, are battling it out for the strongest portfolio. Let's hear their picks for day 2 of the week.
The first buy recommendation is on Apollo Hospitals. One can buy Apollo Hospitals for a target of 1362 with a stop loss of 1295. The second buy recommendation is on NIT Tech. One can buy NIT Tech for a target of 1227 with a stop loss of 1161. The third buy recommendation is on Divi's Labs. One can buy Divi's Labs for a target of 1569 with a stop loss of 1496. Well, there is one sell recommendation, and that's on IRB Infra. One can sell IRB Infra for a target of 147.50 with a stop loss of 156.35.
First one is the buy call on Divi's Labs. The stock closed at 1530 yesterday. It could be bought for a target of 1550, and a stop loss of 1510 should be kept on the stock. My second call would be a buy call on MCX. The closing price of the stock was 759. It would be bought for a target of 770, and a stop loss of 740 should be kept on the stock. My third call would be a buy call on Cadila. The stock closed at 353 rupees yesterday. It could be bought for a target of 365, and a stop loss of 340 should be kept on the stock. And my final call would be a buy call on UBL. The closing price of the stock was 1380, and it could be bought for a target of 1400, and a stop loss of 1360 should be kept on the stock.
My first pick is NRB Bearings. I'll buy it with a day target of 215 and a stop loss of 204. Second, JK Lakshmi Cements. I'll buy it with a day target of 315 and a stop loss of 286. Third, Godrej Industries. I will sell it with a day target of 505 and a stop loss of 540. Last, I will continue with yesterday's sell call of Just Dial. I'll sell it with a day target of 450 and a stop loss of 482.
Well, on that note, we'll wrap up on Power Breakfast. You stay with us because Bazaar Morning Call comes up next.